we have with us Mr. Sunil Nalavadi, CFO of VRL Logistics, to discuss Q4 and fiscal year 20 results. So without further ado, I hand it over to Mr. Nalavadi to take the discussion forward. Over to you.
Thanks, Mr. Abhijit. Good morning to all participants. This is the earnings call of VRL Logistics Limited for the year ended 31st March 2020, as well as Q4 of financial year 2020. Hope all is well at your end. And just I begin with the Q4 number, year-on-year comparison. The total revenue of the company is decreased by around 2.82% from 514 crores to 500 crores. The changes in revenue mainly consist of GT revenue is almost stagnant from 416 crores to 416 crores. And factors that contributed to maintain the GT business are increase in tonnage by around 1%, and we maintain the realization per ton year-on-year basis. The GT revenue growth in GT revenue business mainly impacted on account of lockdown restrictions imposed by the government on account of COVID-19 during the month of March 20. The revenue from bus operation is decreased by almost 21% from 88 crores to 70 crores. And the factors for decrease in bus revenue is one on account of decrease in number of buses by 44 numbers as compared to last year. And apart from that, the decrease in passenger also by 25% and increase in realization by around 5%. This is again impacted on account of lockdown impacted during the month of March. When it comes to sale of power, it is decreased by around 16%. And the decrease in sale of power is mainly on account of the reduction in wind turbine generators by one number in the current year, and as well as low wind velocity. The overall EBITDA of the company for this quarter is decreased by around 4.53% from 61 crores to 59 crores, and percentage to total income is decreased by around 0.21% from 12% to 11.81%. One impact of EBITDA is on account of this Ind AS 116 compliance in the current year. The EBITDA of the company in the quarter is increased by around 25 crores on account of this, and in percentage to revenue is around 5%. The goods transport EBITDA of the company has decreased by around 13% in the current quarter from 55 crores to 47 crores, and percentage to total income decreased by 1.79% from 13.29% to 11.5%. And the impact of the GT EBITDA, one is on account of Ind AS compliances, it is increased by around 22 crores, and percentage to revenue is increased by around 5.35%. The other factors for reduction in EBITDA is mainly on account of this lockdown restrictions imposed. During this period, actually, we have not earned any income, but we have incurred a lot of these fixed expenses such as rent, salary, compensation to drivers for their en route expenses, vehicle taxes, and we have paid some labor compensation for their routine expenses without earning any revenue. When it comes to fuel cost, which is a major expenses of the operating cost, which is increased by around 1 rupee as compared to last year. And in the current quarter, actually, we dependent more on our own vehicle. We hired very less outside vehicle. On account of that, the expenses related to own vehicles, such as fuel, vehicle running and repair, maintenance, bridge and toll charges are little bit increased, whereas it has been compensated with reduction in lorry hire charges. When it comes to passenger EBITDA, it is decreased by around 26% in the current quarter from 8 crores to 6.5 crores, and percentage to income decreased by around 0.76% from 9.96% to 9.2%. And again, on account of Ind AS, the EBITDA is increased by around 2.95 crores, and percentage to revenue is increased by around 4.18%. The other factors to decrease in EBITDA is mainly on account of the lockdown restrictions in this segment. And resulting into change in EBITDA, the PBT of the company is decreased by around 90% from 32 crores to 3 crores. And percentage to total income is decreased by around 5.69% from 6.34% to 0.65%. Resulting into this, the PAT of the company has decreased by around 89% from 20 crores to 2 crores. in the current quarter. When it comes to the quarter-on-quarter, the major changes only on account of these lockdown restrictions. On account of that, we lost almost around revenue of around 50 plus crores in the current quarter. And in terms of EBITDA, it impacted almost around 20 crores because of the fixed expenses also. When it comes to full year numbers, the total revenue of the company is increased by from 2,109 crores to 2,118 crores, and including other income, the revenue is increased from 2,117 crores to 2,128 crores. The changes in revenue mainly consist of one is the goods transport segment, which is increased by 2.29% from 1,686 crores to 1,724 crores. And the factors that contributed to increase in goods transport business are one is increase in tonnage by almost 6% in the current year, and the decrease in realization by around 3%. Again, the GT revenue impacted in the current year on account of the lockdown restrictions in March 20. The revenue from bus operations is decreased by 9.63% from 380 crores to 343 crores. Then as factors that contributed to decrease in bus segment is one is a decrease in number of buses by almost 44 numbers in the current year. And apart from that, the impact of lockdown restrictions in March 20. The realization of passenger is increased by around 6% in the current year. So that's how even we maintained good EBITDA number in this segment. And the overall company EBITDA is increased by around 22% in the current year from 251 crores to 308 crores. And percentage to total income is increased by around 2.6% from 11.9 crores to 14.5%. And on account of Ind AS 116, the EBITDA of the company is increased by around 84 crores and percentage to revenue is increased by around 3.9%. The other factors in EBITDA, one is the goods transport segment EBITDA, which is increased by around 12% from 205 crores to 230 crores, and percentage to total income is increased by around 1.17% from 12% to 13.3%. Again, on account of Ind AS of this segment, it is increased by almost 76 crores, and in percentage to revenue, it is increased by around 4.5%. And in the current year, we try to control total key costs, especially the diesel cost, by acquiring more biodiesel. And price of the diesel also almost similar as compared to earlier year in the current year. There is no much increase. Further, we also reduce much of our dependency on hired vehicles. So on account of that, the lorry hire charges have been reduced in the current year. Then another change in expenses, one is the bridge and toll charges. In the current year, the cashback for usage of FASTag, last year we used to get around 5% cashback, and this year the percentage is reduced to 2.5%. And in the current year, some loading and unloading charges to the Hamali is also increased because of increase in the Hamali rates. Then another major impact on EBITDA of the GT segment on account of fixed expenses incurred in the March 20, even though we have not earned any revenue during the lockdown period. When it comes to the passenger segment EBITDA, which is increased by around 18% from 41 crores to 48 crores, and percentage to total income is increased by around 3% from 10.88% to 14%. Then on account of Ind AS, it is increased by around 7 crores. And percentage to revenue is around 2.11%. The EBITDA of bus segment is increased on account of increase in realization per passenger by almost 5% in the current year. And on account of reduction in the number of buses, the available buses have been operated in the good routes. When it comes to the PBT of the company, it is decreased by around 25% from 140 crores to 104 crores. And percentage to total income is decreased by around 1.73%. And the company has elected to exercise the option permitted under Section 115B AA of the Income Tax Act, that is reduction in tax rates. Earlier, we used to pay the tax at 35%. Now, the current year, we used this benefit and made a provision at 25%. On account of that, one-time benefit of the deferred tax assets also has been accounted in the books. With these details, the PAT of the company is decreased by around 1.96% from 92 crores to 90 crores, and percentage to total income almost maintained from 4.34% to 4.23%. With respect to the fund position of the company is concerned, we maintain debt level at a very healthy level. The debt of the company is increased from 128 crores to 177 crores. In spite of investment in capex of around 122 crores in the current year, and also the dividend payout of around 98 crores, including dividend distribution tax. Due to the healthy balance sheet of the company, we are in a much comfortable position as of now, in spite of a lot of difficulties during this COVID-19 restrictions. And we wish to focus more on our operations with a growth perspective. With this, I'll conclude initial remarks. Now I request to the participant for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Ankita Shah from Lara Capital. Please go ahead.
Yeah, hi sir. My question was on the strategy of new vehicle addition, which has been very strong in the fourth quarter. So, what was the thought behind this huge addition, given that the economic outlook was weak, and because of it, a significant increase in debt that has happened. And what was the gross addition and scrappage, if any, that would have been done in the fourth quarter, which shows a net addition of 229 trucks in this quarter? Your thoughts on the same?
Yeah, basically there is three reasons behind the addition of the vehicles. One, on account of the shift from BS4 to BS6.
Sorry, come again, sir. I'm not able to hear you.
Shift from BS4 to BS6.
Okay.
Hello?
Yes, sir. Please go ahead.
Yeah, on account of that, based on some discussion with OEMs, we have added some vehicles, and most of the vehicles additions are related to the high capacity vehicles. And apart from that, during the current quarter, we reduced scrap the vehicle of around 90 vehicles also. The total addition is around 319 vehicles. Out of that, the HCVs are around 270 vehicles. And we scrapped around 90 vehicles, which are the very old and obsolete.
Okay. And so what was the total capex that we incurred for the same?
Total capex in the current quarter, it is around 36 crores total capex. For the vehicles, it is 34 crores.
And for the full year?
Full year, we have incurred 211 crores. One second. The capex for this quarter is around 56 crores. Out of that, the goods transport segment is around 53 crores for purchase of vehicles. And on full year basis, we incurred around 122 crores. And for the goods transport segment, it is around 111 crores.
Okay. So, sir, how are the utilization levels, and is making our model more asset heavy by adding so many trucks in this current challenging environment? Does it make sense?
So basically, this addition we made, prior to the imposing of these restrictions, and these are not a major addition, according to me. The reason is we anticipated, similar kind of business. If at all, at least same kind of tonnage would have been maintained, we can reduce the outside vehicle portion and we can use these vehicles in a better position. But because of these restrictions imposed, it impacted to each and every business entity in India. So that has been impacted on our business as well. And basically in the post-COVID also, now the utilization levels are under pressure, especially in the month of April and May. But June month is a much improved level.
And then your outlook on debt, sir, that's that question.
Debt, what
has
we
the
are
debt
planning.
gone up significantly because of this capex addition only, or is there anything else to read into?
I mentioned two reasons because of increase in debt from 120 to 177 crores. The reason is one is about capex and another one is on account of dividend. In the current year, we are planning as of now no capex as of now, and moreover there are no dividend plans also until the things will improve. And we are taking a lot of these cost cutting procedures as well. One is we impose some of salary cuts on the employees, and apart from that, the spare part utilization and other kind of stuff. Actually, we want to always we used to do a preventive maintenance. We have fixed certain schedule for the vehicles maintenance and all. Now, based on the kilometers and based on the timelines, actually we are changing some of the schedules of maintenance so that actually the spare part consumptions can be reduced.
Thank you.
So, yeah.
Sorry to interrupt you. Ms. Ankita, may I request you to come back in the question queue for a follow-up question? Thank you. Next question is from the line of Kaushal Shah from Banki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, I have a couple of questions. One is, how is the availability of the driving staff, drivers, the assisting staff like cleaners, etc., in the goods transport business? On the bus transport business, sir, if you can just share some details on the reduction. What was the reduction in the number of buses? The reason for the reduction in the buses, and how do we see the current environment? Because at least in some parts of the country, bus transport has begun for interstate also. So how is the outlook on that front?
No, basically, when it comes to the availability of the drivers and the loading and unloading people, one good thing what we are having, all the drivers are on payroll of the company. So that helped us to directly interact with the drivers on a continuous basis. And moreover, most of the drivers are with the company for a long term. So initially, after the lockdown, what happened, since the government announced immediately, most of the vehicles have been stand wherever the position was. Then during this lockdown period, and as well as since after 1 week they allowed for the movement of the vehicles, actually we tried to consolidate these vehicles in our premises, either in transshipment hubs or big branches. And whatever goods were in transit, actually we have gave more focus to reach such goods to the relevant delivery offices and transshipment hubs. On account of the availability of the drivers are concerned, initially there were certain hindrances. Basically, once immediately after the lockdown announcement, that is one issue, and most of the people nearby places, they went to their native places. And since we appointed drivers across the country from all the regions, that has not impacted much. But whatever difficulties happened after this transportation has been opened up, most of the drivers again they gone back to their native places and other things. But the people who were not on the job during the lockdown, again they come back. So because of that, the availability of the driver was not a much concern in our operations. Even today, whatever the loads we are getting, actually we are getting enough of drivers. When it comes to the hamalis or loading and unloading people, again the same issue. The loading and unloading people, most of the people are migrant workers. So after this train facility has been started, most of the migrant people, they have gone back to their native places. But during that time, actually our operational people have tried to appoint the local people and do the work. Now again, since the transportation facility has been made used up, so most of the people are joining now. So that is not an issue. And whatever tonnage we are handling today, we are in a position to move the goods as well as the loading and unloading is happening smoothly. When it comes to the bus segment, the second question, one is what we opted in bus segment is we can opt for a vehicle for non-use without paying any taxes and other things. We can use take an option for non-use of vehicles. So during lockdown and even current period, based on the schedules, we are paying the taxes to the vehicles and operating. So otherwise, if there are no schedules and we are going for a non-use option, and during these non-use options, we should not move those vehicles. but we no need to incur any expenses like taxes and other kind of things also. So that on an overall basis, the bus operations have been impacted very badly because one is even though the bus transportation is allowed, they are putting a lot of restrictions to maintain social distance. Only 50% of the occupancy is allowed, and we have to charge passenger higher to incur or to get at least recover the operational expenses. And apart from that, interstate movement for private people, some of the states allowed, especially the Telangana and the Andhra Pradesh, Maharashtra. Some states are allowing, some states are not allowing, then there is no clarity at a government level. So again, because of this, and most of the routes are connected, say for example in Maharashtra connected to Pune and Mumbai, and in Telangana it is connected to Hyderabad. So that's the reason we are taking proper precautions. Even in Gujarat, the major route is Ahmedabad, Surat and Ahmedabad. So considering these factors, what we are doing is we are taking appropriate steps rather than making a hurry and incurring losses.
Okay. So is it safe to say that the bus operations could be virtually kind of non-existent in the current quarter, which is the first quarter?
It was there in the April and May, you can say, non-existent. But from June it started.
Okay. And on the goods segment, sir, if you can just share some more thoughts on which are the areas where you're seeing demand sectorally. We also have a new hub in Surat. So are we seeing some activity over there also? And
basically, see what happened. Even though the lockdown is open for the entire country, but these major cities, a lot of these red zones and restricted areas are there. Even today, say for example, if you take Mumbai, we are in a position to operate outskirts of Mumbai till date. Recently, some last 1 week time, actually they are allowing the inside cities also. Otherwise, it is totally restricted. We used to operate only from B1D. Similarly, in Chennai, the operations were started. Again, the lockdown restrictions have been they imposed. Right. And Delhi also, again, there are certain issues like this. See, one good thing about us is we are not depending much on any geographical area and routes. So that's how actually it is helping us to at least grow in other routes. But there are certain hassles like restrictions in these cities and other things. And when it comes to say commodity-wise, the cloth textiles actually we use, that is a major contribution for our business. Earlier it was around 15 to 16%. Now that has been reduced to around 12%. But the same is in case of agriculture goods, pharma, food items, the percentage of contribution is increased drastically.
Right. And so one final question, if I may. You spoke about the cost-cutting measures. So if you can just share some more details on that. What is, are we targeting some percentage reduction, or what could be on a full year basis for the current year 2021? In terms of all the major expense heads, what kind of reduction are we looking at?
Yeah, one is about fuel, where we want to focus more on again further biodiesel also. That is one thing. And in terms of vehicle repair and maintenance, which is also major cost, as I said, just we are changing the schedule of maintenance. We are increasing the period for a little bit. So we are targeting to use the spare parts for a more life. And apart from that, the employee reduction cost, it is very temporary. But for the first quarter, April, May, June, that cut is already there. It may extend further. And apart from that, there will not be any capex for this current year. So for capex, as of now, we are not planning to incur. And to that extent, there will not be any increase in the debt. And apart from that, about these government facilities, especially about taxes and all, actually they have given some concessions. Initially, we paid these taxes, especially the vehicle taxes and other kind of things. So just we want to take those benefits in the current. Basically, it is some of the states they allowed 3 months there is no tax. Some states are allowed around 2.5 months they waived off. And especially some states, Gujarat and all, they waived off up to 6 months. So we are observing these changes very keenly and taking those benefits also. And in terms of the utilizations are concerned, basically we are having a sufficient vehicles, own vehicles as of now, so we want to put restrictions to engage the outside vehicles so that we can increase our own vehicles kilometers. So these are some steps actually we are planning.
Right. Thank you. Thank you very much. I'll join back in the queue.
Thank you very much. Next question is from the line of Alok Deshpande from Edelweiss Broking Limited. Please go ahead. Hello, Deshpande. May I request you to go ahead with your question, please?
Yeah. So two things from my side. One is in the disclosure that you had given in terms of the COVID impact a few days ago, you had mentioned about taking on debt to sort of ride through this period of Q1. Any color, Sunil, you can give us on what that quantum of incremental debt has come on books this quarter?
Yeah, as of now, see the total debt, the gross debt is around 214 crores.
Okay.
Say net debt again, it is in the range of around 196 to 200 crores. And we have not taken any benefits of moratorium. All the installments have been paid as and when the dues. Because we were having a good working capital, control on good working capital. Basically receivables and all these numbers are very less in our case. So that's the reason we are having sufficient even working capital limits. For the time being, we are using those limits for whatever shortfall in funds. But as of now, the debt level from March to this period, it is increased from say 177 crores to 200 crores.
Okay, so only about 20 odd crores is what you've added. And you see that number going up? Yeah.
But currently, again, with the current operations, we are not feeling any shortfalls as of now. But we have to see how the days will forward.
Sure. And second question is on the current sort of operational utilizations. So I understand that you mentioned that April and May were very sort of negligible quantum of revenue. But in June, based on data that comes out on e-way bills, etc., is it fair to assume that we are at 50 or 50-60% of utilization, somewhere around that?
Yeah, it is in that range.
Okay. And just one last one. On the hired trucks that we do, what percentage of revenue that comes within good transportation from trucks that are hired?
It's around 8 to 9%.
Okay.
So this spread, it will drastically come down in the range of around 4 to 5%, you can say.
But that you could immediately, once the lockdown started, did you have to pay for that hire for a few days?
No, nothing. Oh, see, all hire, our understanding is with the vehicle suppliers, as and when the vehicles will operate, then only we have to pay. Otherwise, no. These are all spot contracts, not attached vehicles.
Understood. Thanks so much, Sunil.
Yeah, thank you.
Thank you very much. Next question is from line of Krupa Shankar from Spark Capital Advisors. Please go ahead.
Hello.
Go ahead, sir.
Yeah. Good morning, and thank you for the opportunity. I had two questions. First one was on the basically on our existing model, which is asset light, and we have drivers on our roles, which will enable us to control our supply of trucks in the market. So given that the situation what we saw wherein the unorganized and the asset light players were not able to supply trucks in the market, did we see any massive jump in the market share? And if you can quantify what would be the market share jump?
Yeah, see, based on the customer profile, what we are seeing, we are adding a lot of new customers. And see, through GST numbers, actually, we are analyzing that information in our records, especially in the states like Gujarat, even states like Karnataka, and some of the parts of Rajasthan and all. We are seeing a lot of these new customers, which earlier we had not done any business. But see, here what will happen, since these are not contractual customers. These are all again the paid and to pay customers. So as and when customers will approach to us, we are booking the consignment. In terms of percentage, again, you can say around 6 to 8% at least we are seeing such kind of GST numbers in our records, the new records.
6 to 8% increase in market share.
Yeah, the new customers which are adding to the revenue.
All right. Okay. And also, sir, we have also seen that the freight rates had gone up substantially due to lack of vehicles. So, given that we should have had a big advantage of the situation, so were we able to charge in a better freight rate on our parcels during this period?
Yeah, considering these restrictions and the lockdown restrictions and other things, yes, we have taken a step to increase in the freight rates.
So what would be the consequences?
I don't want to share the exact percentage, but we have taken a step to increase the freight rates.
Okay. Okay. So, sir, in addition to this, so you did also mention that the contribution.
But apart from that, you have to also note that. So, along with this freight rate, just I want to mention another point. From the last, say, few days, almost 10 days, every day the diesel price is increasing. And even some of the states, they are increasing the local VAT rates. So considering all these things, we have taken this rate hike earlier when we started the operation in the current year. But about the recent development, whatever the increase in diesel rates are happening, that we have to take further steps on that. So because of that, actually we are concentrating more on a biodiesel, and we have to see how this will move in the days forward.
Okay. Also, one more question on the contribution of sector, especially given that textiles has seen a decline. Can you also specify what are the other sectors apart from agri, which have grown, and any percentage as to what would be the contribution to overall revenues?
So sector-wise, again, dependency, as you know, it's very less compared, See, cloth is a major around 15-16%, but the rest of the segments used to contribute in the range of around 8 to 9%. But agro sector, as I mentioned, it is increased by almost 3-4%. And this pesticides and other commodities, that is increased by another 3-4%. And some of the commodities like paints and other kind of things, this construction equipment or construction items, which are related to, one is, it may be the hardware or it may be the paints and other things. Those ratios are also a little bit increased. Pharma is increased. But rest of the, again, commodities, most of the commodities are in general in nature. They be it FMCG, consumer goods. So we are more or less in the same percentage.
So the decline would have been predominantly in the auto segment and perhaps.
Auto spare parts, again, see, we are more into the spare parts. Since because of the factory lockdown and all, that is a reduction. And another reduction is on this educational things, like be it a printed books or some of the kind of stationeries and other things, those have been reduced.
I'll get back.
Household goods percentage is increased. The household, be it a sanitary item and other kind of stuff. So detergent, these kind of items have been increased.
Okay. Understood. I'll get back in the queue. Thank you.
Yeah.
Thank you. Next question is from Abin Gandhi from BNK Securities. Please go ahead. Mr. Gandhi, may I request you to unmute your line from this side and go ahead with the question?
Good morning, sir. Just wanted to check on, sir, if we look at the diesel consumption data, that kind of shows a 80-85% kind of normalization, whereas that is not seen in your numbers as well as the e-way bill. So if you can help us understand why is the disconnect there?
Sorry? Diesel consumption.
So if you look at the oil marketing companies reporting diesel consumption data, that is showing almost 80-85% kind of normalization. And whereas if you look at the e-way bill, there is not so much of a pickup. It's like a 50-55% kind of utilization. So what do you think is the disconnect between the two?
Because again, it is a larger this one. You see, all it's related to all these manufacturing things, so many parameters. If you sector specifically, if you have any data, then I can comment on this.
Sure. No problem, sir. The second part is just wanted to understand on the roughly, if I look at the OPEX for the goods transport segment alone, which is let's say around 290 to 300 crore. If you can just explain, what could be a variable component and what could be roughly fixed. I mean, a broad split would be good, just to understand the operating leverage that will play out in one case.
See, the fixed expenses are in the range of around, say, 25%.
25% is fixed. And almost 75% is variable, is it, sir?
Yeah, variable cost.
Okay.
Even driver cost and other kind, in our case, again, it is a variable. Even though they are on the roll of the company, we pay based on their performance. But the employee cost, which is other than drivers and loading and unloading people, and the rent expenses, the vehicle taxes and these things, and some of the maintenance, again, whether vehicle operates or not, on a periodical basis we have to incur. Only such expenses are fixed in nature.
Right.
The another component is insurance also we have to pay.
Sure, sir. And just sir, one more thing. If I just look at your cash flow statement, just wanted to just a clarificatory question here. On the operating activity side, we see a big bump up from 192 to 257. And if I look at there is a new line item of principal portion of lease liability and interest portion of lease liability, which is around 77 crore. So this has to be netted off from the operating to make it like to like. Is that correct way to look at it?
Not exactly. See, basically you have to, one is we have given Ind AS impact separately in the slide.
Okay.
One is on the impact of Ind AS on the finance cost, impact of Ind AS on the depreciation also.
Right.
So those components, the depreciation component actually you have to reduce in the cash flow.
Got it. Thank you. That's it from my side.
Thank you very much. Next question is from the line of Achal Lohade from JM Financial Limited. Please go ahead.
Yeah, thank you for the opportunity, sir. Just wanted to check in terms of mix in SME, non-SME form for us for FY20.
No, it is very difficult to say like that. But we are having a revenue breakup based on the contract, paid, to pay, and account customers. And you can say B2B and other than B2C customers. In case of goods transportation, around 90 to 93% of our revenue is from B2B. B2B is in the sense all these customers are having a GST number.
Okay.
And hardly around 6-7% customers, they don't have GST numbers.
Right. Okay.
And in terms of paid, to pay, and account customers are concerned, account customers which we provide a monthly billing facility is around 18% of our revenue. And rest of all, the paid and to pay.
And to pay means at the time of delivery, is that right?
Yeah, at the time of delivery, they have to pay the freight and take the delivery of the goods.
Got it. Alternatively, in terms of LTL, FTL, would you be able to give some sense in terms of the mix for us?
LTL mix again as presented, it is almost around 89% of our revenue.
And
11% is FTL.
19 as well, sir?
11% is car carrier and the FTL. FTL in the sense from one factory to the other factory belonging to same customer.
Okay. Have mix remained in or is there a change?
Yeah, during this initial period, say, for example, in April when the lockdown is open, say after 19th of April or so, we focus more on a FTL. And again, May the mix, the more is on FTL and less on LTL. LTL in the sense that portion. The FTL earlier, if you say 6-7%, that has been increased to say around 12 to 15%. But again, in the month of June, the mix is almost similar. The FTL is in the range of around 5-6% and balance is LTL.
Right. Just to reconfirm, you said 11% for FY20 is FTL/car carrier. It was 6 to 7% FNH. Is that understanding right?
Correct.
Okay. Secondly, with respect to the mix in terms of our own car, trucks versus hired, what has been the mix in terms of tonnage?
The tonnage, we cannot say the mix because some portion it will carry in the own vehicle, some portion it will be taken in outside vehicle, like that it is. It is totally mixed. In terms of if you say the kilometers or the percentage of lorry or what we pay, it is in the range of around 8 to 9%. Now that percentage is drastically reduced in the range of around 4 to 5%.
Okay. In terms of the kilometers you're saying, it was is what you're saying that's in the current year.
Yeah.
Okay.
Thank you very much. Next question is from the line of Rupesh Kashyap from Equity Securities. Please go ahead.
Yeah, hi, good morning, sir. Rupesh. Sir, in your Q4FY20, your lease rental costs seem to have increased to 25 crores versus 20 odd crores in the previous 3 quarters. So has there been any addition in rental properties in the fourth quarter?
No, that's on account of again the Ind AS accounting entries.
No, right. So I subtracted the Ind AS freight cost and the excluding Ind AS freight cost for the fourth quarter. So that number comes out to 25 crores versus the previous 3 quarters were 20 crores. So that means your lease rental payment has increased by 5 odd crores in the fourth quarter.
No, here what happened, another thing what happened in the last quarter is some of the reworkings have been done in Ind AS.
Okay.
So we have taken a long lease agreement. Some classification changes have been done. That's the reason.
So going forward, I should take this number going forward, right? And this fourth quarter number.
Yeah.
Understood. And sir, during the lockdown period, sir, you talked about the rental negotiation with your landlords. Has there been any update on that?
Yeah, actually we requested all the landlords to waive off rent for the month of April, and almost around 90-95% of the landlords have been accepted our request, and that one reduction in expenses will happen in the current year.
So that is only for the month of April, you're saying?
Yeah, we requested full rent for the month of April.
And so May, nothing has happened. May will be full rentals.
Yeah, May again. See, instead of asking some percentage during this lockdown, say 10% or 20%, we asked for 1 month completely.
Understood. All right. So you talked about the fixed cost part. So I just wanted to little bit dig deeper. So like you said, the monthly fixed cost would be around 45-50 odd crores. Is that number correct, sir, for us? So if I include the employee expenses and the other expenses, so 45 to 50 crore, including the rentals.
Yeah, for the days. Yeah, it will be in the range of around 50 crores.
750 crores. Okay. And sir, understood. And sir, like you highlighted that there has been some salary cuts at various levels. So I just wanted to understand how much this monthly rental fixed cost will reduce post the measures that you have taken.
Basically, the impact is very less because most of our employees are at a base level salary.
Right.
So basically, what we have done is up to 50,000 there will be a 10% reduction.
Okay.
Up to 30,000, 30 to 50,000. No, up to 50,000, 10% reduction. 50 to 1 lakh, 15, and over and above 1 lakh, whoever drawing 20% reduction. That's what actually we did, and the people who are drawing above 50,000 are very less portion. So overall, the impact will be around 1.5 crores per month.
Okay. And so this reduction is only for the lockdown period or for the entire year?
for the time being lockdown period, then again we have to think. Because most of the people now they are working, and even wherever the restricted areas are there, only in those places the people are not working.
Right.
Yeah.
Right. So last
again, see, we have to give more. We have to give the support to our employees also.
Yeah.
We don't want to cut for a longer period.
Right, sir. Right. Okay. And then lastly, sir, your car carriers used to be around 101, 102 in number, but I see that suddenly it is 0 now in March 20. So have you just totally let go of that business? And what are your thoughts on that?
Yeah,
is it
basically
due to
what happened? Those permits have been expired, so that's the reason those permits have been instead of car carrier vehicles, those have been shifted to the normal goods carriers.
Okay, but you will continue this business, right?
No, car carrier business will not be there.
Okay.
But instead of car carrier, those vehicles will be utilized for these normal goods carriers.
Understood. Okay, sir. Thank you. I'll come back in the
Thank you very much. Next question is from the line of Ankit Panchmatia from BNK Securities. Please go ahead.
Hi, sir. Good morning, and thanks for taking my question. Sir, I just want to understand this short rates which were kind of being seen in the surface side of it, where the rates were higher by close to 1.5 to 2x for a short period in Q1. But sir, was this more to do with driver availability, or was it more to do with return loads not available? How are we kind of placing our vehicles in talking in terms of return loads, and how are we seeing that side of costs related to our vehicles? If you can just share some insights on this.
Yeah, see now, increase in freight rates. What you are mentioning, these are selective, loads, not for normally all commodities. Basically, if any pharma commodities are there which we need to move urgent basis, then the people have charged some 1 or 2 times or something like that. But it is not applicable to the other kind of commodities. And when it comes to the utilization of vehicle or rescheduling of the vehicles, in most of the places, the operations are not so normal as compared to earlier. Because if the vehicles are operating between, say, Mumbai to Bangalore, and there will be some factor of load more in Bangalore, some load factor is less in Mumbai. Accordingly, we have to reschedule vehicle either to the nearby Mumbai place or up to Gujarat or something like that. And in some cases, the load is available in some other cities, and especially loads are available up to Delhi. But if the return loads are not available, and again we have to move those vehicles either to Punjab, Rajasthan, or some nearby places. There again we have to operate some kind of empty kilometers also. Those kind of scenarios are there on the ground, and we are hoping that soon we may get both side loads. But those things are happened most in the month of May and even some part of June also.
Right.
Basically, to make the availability of the vehicle wherever the loads available, we run some of the empty kilometers also. And especially in south also, what happened, the good loads were available, say, assume that in Hubli. Then surrounding Hubli places, if any vehicles are there, then we have to call those vehicles to Hubli and load. From those places to Hubli, those vehicles used to operate with an empty load.
Right. And sir, regarding your expenses, which you said that we are using or we are looking out for reducing the repairs and maintenance costs by assessing the spare parts for more life. Sir, earlier, so is it right to say that this would continue for a good period of time, because maybe for FY21 we would be able to say that the tires we are able to use for another 6 months or another year, and then this kind of cost synergies we would continue to look for FY22, FY23 as well, wherein it would be a new normal for us to use these spare parts for a longer period of time. Is this the thought process within the maintenance team?
Yeah, just I mentioned about these empty kilometer, other kind of stuff. Say, for example, if the vehicle operates completely with a load, then consumption of these tires and spare parts will be different. If these vehicles operate with some of the empty kilometers, some of the waiting period and all these things, then the consumption parameter will change. Accordingly, the technical team analyzing each requirement of each and every spare part, including tires, then accordingly the schedule of maintenance they are little bit changing. Right. For example, if a particular spare part used to be changed at a X kilometer, now they are changing from X kilometer to X plus kilometer, like that.
Right. And one last question, sir. This kind of aggressive vehicle addition in the last quarter, it's quite surprising. So I just want to understand the whole thought process from the promoter level side. How are they seeking? Are they seeing this as an opportunity to kind of get into the market with loads and tonnage and capture a higher market share? What is the thought process from the promoter level side by seeing this kind of truck addition for us?
No, basically, see, the addition of trucks are one reason from change into BS4 to BS6. Because of that, the vehicle cost used to increase. So based on some discussion with OEMs, we have added some of the vehicles. And apart from that, in terms of the growth strategy of the company is concerned, so and then when required, actually we are in a position to incur those capex because our debt level is at a very comfortable level. We can take a debt, even cash flow point of view, our cash flows are very good compared to the other operators. So that's the reason if always, we think to growth in a faster level. So that's the reason, actually, if we see the realization per ton in the last year, even though the diesel price is a little bit decreased, but we have overall reduced the realization per ton by almost 3%. That means actually to carry more load, to concentrate or to acquire more market. But if the outside economic conditions are not supporting to those regions, then we cannot do anything. But in terms of growth perspective, if anything is required, be it a capex or be it the number of opening of branches, appointment of employees, we are already always open for it. Right. That is not any constraint in our case.
Right. Great, sir. Great. Thanks for the clarity, sir.
Yeah.
Thank you. Next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello.
Yeah, Prateek.
Yeah, good afternoon. Good morning, sir. So my first question is on, so you mentioned about we have taken some freight rates increase. So is this enough to cover the recent recent increase in diesel prices, or we anticipate further freight rate increase?
No, without this diesel price, actually we took a rate hike the moment operations have been started. But these diesel increases are again, this is a development of last 8 to 10 days. After they linked again fuel price, the daily changes, then again it is increasing. Now we have to analyze this information and how to take it forward, we have to see. And moreover, see, we cannot always increase the rate. We have to study the market. And moreover, with this kind of operational level, we don't want to take a risk. Again, the operationals have to come to normal stage again to increase the freight rates or something like that. So right now our concentration is more on a increase in tonnage and let us come to that normal level of operations.
Right. And when we in terms of impact of this lockdown, in terms of recovery, which are the except for, let's say, remove the impact of metro cities or the key cities, in general, when we talk about regional level, like north, central, south, west, east, which region is doing better or recovering better?
South is a better position compared to other regions. And moreover, since our operations are more related to south, that's why the recovery is on a faster track. And now the west is the state of Gujarat and all, now again it is picking up very well.
So the new Surat unit is below what we were at, like when we started.
During lockdown, absolutely there were no, but now the things are improving. Actually, now whatever vehicles, Surat, actually we are getting some good loads now.
Okay. And just one question on your receivables. Has that got impacted in any of the three subcategories you have?
Receivables, again, the percentage of receivables compared to our business is very less. And moreover, because of this non-operational of offices and non-availability of staff or something like that, there are certain delays. But again, it will be normal. We are hoping that it will be normal in the next 1 month or so.
Okay. And one question on you had a explanation like earlier. One question. Your depreciation increase or something related to like Ind AS. Can you elaborate that further? Why that depreciation has increased related to Ind AS impact?
So Ind AS basically there are two changes. One is the rent expenses, which earlier whatever expenses for the current year we need to account it as the expenses for the current year. Now, whatever these long lease agreements and whatever long lease things will be there, we have to value based on the fair value. Based on the fair value, we have to create an asset and liability. And on liability, again, these expenses we have to bifurcate into two things. One is, on whatever liability we will create, on that actually we have to account the interest cost. Currently we are accounting at a 9%. And whatever asset we'll create on that, we have to account the depreciation. Because of that, if you see the total freight handling and other costs, which have been increased by around 83 crores in the current year. And that has been segregated into finance cost and depreciation. And on account of this entry, there is a further loss of around 5.68 crores in the current year at a PBT level because of this Ind AS. Means whatever the rent we used to pay in a normal course, that is less as compared to the fair value. That's why we have made additional provision of around 5.68 crores. But this 5.68 crores benefit will come in the subsequent years. As and when the rent will increase, but fair value increase will be lesser. So because of that, some benefit will be there in the subsequent year. But overall impact of the current year at PBT level is reduced by around 5.68 crores.
My question was more related to Q4 increase, which we have seen. We signed some long-term agreements you mentioned.
Yeah, it is totally increased by around 25 crores in the Q4. That additional impact of around 5 crores in the current quarter.
Okay. Okay, sir. I'll get back to the queue. Thank you.
Yeah.
Thank you. Next question is from the line of Mukesh Saraf from Spark Capital Advisors. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. Just one question. You had mentioned about how you saw a 6 to 8% jump in the number of new registrations or new customers you handled. But you did mention that these are not contractual customers. So, do you think that as you see the regional players and the smaller players come back in the market, these guys can move back to them? Or do you think they'll stick to you? Is your pricing higher than the usual of what they've been paying? Is there some sense on that?
No, that's why I clearly mentioned that these are not the contractual customers.
Yeah.
These are paid and to pay customers. But the things are at a regional level and even at an operational level, the unorganized people are facing a lot of issues.
Right.
So one is on the compliance side, other one is at this lockdown restrictions, they are unable to get back with a normal level of operations. Those issues are there. That's why the new people or new customers are approaching to us. And apart from that, our marketing team and even at a regional level or local level, our people are also interacting with these people continuously. And basically, once they come to know about services, the efficiency in services, we are hoping that definitely we can maintain those businesses.
Okay. And in terms of, the number of manufacturing companies, etc., we've been talking to, there is a general, sense that there is shortage of vehicles for them, and I guess these should be typical contractual customers. So was this an opportunity for you, and you think it's still an opportunity that is open for you to add a lot of contractual customers? Also, because you probably can guarantee better service levels, better timelines, given your business model is slightly different. So what is your sense on that?
Yeah. That's the reason in around 10 to 12 cities we are having an exclusive marketing team basically to approach these kind of customers. And definitely whatever new opportunities comes, then we are the first people to get those businesses and give proper service to those customers.
Okay. So you expect there could be an increase in such contractual?
Yeah.
Okay. And lastly, how is our mix of the priority parcel business, the express business that we usually call? How is that? Is there some, like you mentioned that there is a focus on that, and so how is that being for us?
No, that's the reason. Instead of priorities now, we make two classifications. One is door-to-door service and other than door-to-door service.
Right.
Door-to-door service always it is on an increasing compared to this other than door-to-door. The reason is one is on account of this e-vehicle things also. The people see the moment we store again we have to extend and all these things we have to do. And moreover, when the other than door-to-door commodity lies at our godown, then the person who wants to collect those goods actually has to come along with the vehicle. All these things are there. So that's the reason now most of the people who are having good quantum, they are preferring to have a door-to-door service rather than again other than door-to-door service. So that percentage is always more as compared to other than door-to-door service.
What would that percentage be now, sir?
For example, 6% now overall increase in tonnage. That increase in tonnage of door-to-door is around 8 to 10%.
Okay. Right. But it's still not very substantial of our overall business, isn't it, sir?
Yeah, because of this lot of, that's why I mentioned whoever having the good quantum of business, actually they want to have a door-to-door.
Right. Okay. Right, sir. Thank you. That's it from my side.
Yeah.
Thank you very much. Next question is from the line of Nimish Shah from MK Global. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, you mentioned that in the month of June, you are currently working at around 50% utilization. Is that?
Yeah.
Yeah. So, what was the utilization at pre-COVID levels, say in the month of Jan-Feb?
Sorry?
What was the capacity utilization in the month of January or February?
100%. Since we operate with a mix of own vehicle and outside vehicle, we always give a preference to own vehicle. Once own vehicle usage reaches to 100%, then only we engage outside vehicle. This is I am talking about the high capacity vehicle. When it comes to local vehicles which are operating from hub to spoke, normally we will not monitor any usage. And these vehicles on a continuous basis, those vehicles have to operate, whether load is available or not available. Even though lesser capacity, those vehicles have to operate to provide the service at last mile.
Okay. And sir, for the quarter, what was our tonnage growth on a QOQ basis in Q4? I missed that.
Okay. It's almost same. There is no growth in tonnage. Actually, in fact, yeah. Okay.
That's it from me. Thank you.
Thank you. Next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
No, just I want to clarify the earlier question. There is a decrease in tonnage of around 7% on a quarter-on-quarter basis. Whatever reduction in the revenue is on account of decrease in the tonnage, and there is no change in the realization.
Okay. So I have two questions. If you can help me with your number of branches and number of employees at FY20 end.
Okay.
And also, just to understand this passenger transport business. So if I If I sort of look at numbers, exchange days adjustments or those stuff at the EBITDA level, the top line has dropped sort of significantly, almost 10% YOY, but the EBITDA is flat. So is there a way of sort of offsetting? Is there some more levers on the margin side that we can have access to, or how are you sort of allowing your margins to sort of stay same when your top line is dropping 10%? If you can throw some more insight on that.
Yeah, basically, as and when we reduce the number of vehicles, obviously there will be improvement in the margin. Basically, the number of in that scenario, we operate these vehicles in a good route. So there, the occupancy levels will be higher side and realization also will be on higher side. That's why if you see the last year on a full year basis, even the top line is decreased because of the reduction in number of buses by 44%. But when it comes to EBITDA level, there is an improvement, except this COVID restrictions. Otherwise, in the rest of the period, if you see, the margins have been improved from the per segment.
So we were operating loss-making routes. Is that the way of looking at it, or
not operational loss? There's a little bit less margin business. The competition is a little bit high.
Okay.
We cannot, increase the charges. The occupancy level will be at a very competitive level.
So similar consolidation is possible in the GT segment as well, or no?
GT segment is not like that. Again, GT segment is totally different. In terms of